If you've even scratched the surface of investing, then you've probably come across ETFs before because they are so damn popular. In fact, in Australia alone last year, there was $36.2 billion invested in ETFs, and it's expected that by 2020, the ETF market globally is going to grow to over 10 trillion US dollars. 10 trillion, I don't even know how many zeros there are on that number. So today I'm going to talk about what are ETFs and why are so many people investing in them. Hi, it's Brad here from The Guided Investor, and today I am talking about ETFs. Firstly, the term ETF is an acronym. It actually stands for Exchange Traded Funds, and they are basically a share which commonly tracks an index, but it can also track other things like bonds, commodities, or other groups of assets. Now, I want to keep this video as simple as possible, and I think the best way to do that and explain ETFs to you is to use an example. And the example that I want to use in today's video is the Vanguard Australian Shares Index ETF, or VAS. Now, I think VAS is a great example of an ETF because it's one of the ETFs that I commonly use in my portfolio, and also it is one of the most vanilla ETFs that you're going to find. It basically just tracks the S&P ASX 300 index. Now, you're probably sitting there thinking, what the hell is the ASX 300 index? And that is a damn good question. Okay, so I've made a few different piles here, and each pile represents a different company listed on the ASX. Now, you'll notice there's different sized piles, and that's because it represents the company's market capitalization, which is basically a fancy way of saying the company's size. So the bigger the pile, the bigger the company. So when you're talking about the ASX 300 index, you are talking about the 300 biggest company listed on the Australian Stock Exchange as determined by their market capitalization. Now, obviously, I didn't want to be here all day, so I don't have 300 piles here, but you get the idea. So what VAS does is it gives you exposure to all of the top 300 companies listed on the ASX. Now, the exposure that ETF has to each of these companies in the top 300 is going to be directly proportionate to the size of the company. So all VAS really does is it mimics the ASX 300. There you have it, VAS. So the biggest company currently listed on the ASX is Commonwealth Bank, or CBA. So VAS is going to have the biggest exposure to CBA. The second biggest is BHP, and it goes on and so forth. It will do this for the top 300 companies listed on the ASX. And as market capitalizations change, as they do, then VAS is also going to change with them. So as you can see, by having a single holding in VAS, you're getting exposure to the top 300 companies listed on the ASX. Now, this is a really good way to get exposure to Australian shares in your portfolio. Now, as with any investment, there are pros and cons of investing in ETFs. So let's start off by going through the pros first. 1, there is a lot of diversification in a single shareholding. 2, the management cost of investing in an ETF is very low, and that is because all the investing is basically done by a computer. It just follows a set formula. And 3, ETFs are a form of passive investing because it simply tracks the index. Now, there's a massive debate out there going on about what's better, active management, where they try and pick stocks to outperform the index, or passive management, where they just take the index. And there's a lot of research to suggest that, often passive investing will outperform active management. But, there's pros and cons of each side. So personally, I like to have a little bit of both in my portfolios. So that's some pretty good pros, but now let's look at the cons of investing in ETFs. 1, the value of your investments is going to go up and down in line with market movements. 2, using an ETF, you'll always be 100% invested no matter what the market condition is. So with active management, if they think that the market is a little bit expensive, they often have the option to pull some money out and put it in cash as a bit of a safe house. With an ETF, it's always 100% invested, so the only way that you can go to cash is if you do it yourself and you actually sell down the ETF. 3, there will be brokerage payable on the purchase and the sale of the ETF. The amount of brokerage is going to depend on the platform you use. And obviously, if you make a profit when selling your ETF, then it's likely that you're going to have to pay capital gains tax as well. Number 4, there may be a tracking error on the ETF that you're purchasing. So what this means is that potentially the ETF isn't exactly quite mimicking the index which it's supposed to track. And this can mean that you can sometimes overpay for your ETF. Number 5, and that is, for me, potentially the biggest risk of an ETF, and that is that ETFs at their current capacity haven't been tested in a down market. Now, they've really gained exposure and gained popularity since the global financial crisis in 2008, and we haven't had a severe market downturn since then. But there is some speculation out there that thinks that if prices were to drop dramatically and sell-offs were to happen rapidly, then there's potential that the ETF provider couldn't meet that demand and your fund could subsequently be frozen, which would essentially leave you stuck in an ETF in a falling market, which you don't really want. So in summary, I think ETFs are a great investment option. I use them in my portfolios alongside other investment vehicles such as LICs, M funds, managed funds, LITs. And I think it's important to get a diversification of investment structures in your portfolio because they all have their individual pros and cons. And just because you've watched this video doesn't mean that you should go out and buy VAS or any other ETF for that matter. You need to do your own research and work out if purchasing an ETF is appropriate for your particular situation. Also, I use the example of a Vanguard ETF in this video. Now, Vanguard is not the only ETF provider in the market. There are a number of different providers out there, and if you're having a look through them, I also suggest you check out BetaShares and iShares because they are two very good ETF providers as well. Hope you found this video interesting, guys. If you did, please smash that thumbs up button and subscribe so you don't miss any future content. I'll see you in the next one.